Can hear you plain as day. What's going on, Phil? What's on your mind?
Hey, what's up? So I just kind of have a question here. So you seem to be quite a fan of GameStop, and heard you say that you're not really a fan of buying Amazon at its current valuation. I'm just trying to understand why, because to me it seems like Amazon's a company that's far more a greater position for growth currently than GameStop. GameStop seems to be dying. The overall business, physical retail seems to be dying.
Hmm.
Amazon overall, they seem better positioned, especially for future selling games, and as well as Sony and Microsoft trying to get out of GameStop, and it's really just quite confusing me as to why exactly you're buying GameStop right now, where GameStop currently, has a PE ratio of 170. They're only profitable due to their short-term income, which that could change, with the Fed cutting rate. Overall, it just doesn't really seem like a very healthy company. Ryan Cohen isn't giving any guidance in earnings calls, anything like that. Really, what you're getting quarter after quarter is a declining revenue, declining earnings. It really just seems like a company that's just kind of on the back foot and about, ready to go bankrupt at any moment.
Oh wow. So first, whenever we start a conversation, we say, "Hi, nice to meet you, Phil Spencer." Wow, what a name, fake name, but um,
Yes. Yeah,
no,
so,
no, it's fine. I mean, if you don't want to give out your real name, your real identity with all the info you're given, I mean, how do we give it merit, right? But
yeah, that's
I'll
fine.
play with your stuff, um, all
Sure.
the info you're putting out. Okay, so let's talk it out. First,
Mhm.
how do you know Ryan Cohen? I'm just curious. Like not
How do I
normal
know Ryan
people,
Cohen?
like normal people just don't shout out names of CEOs and board of directors, right?
Mhm.
Like who's the board of director for
Well,
Amazon?
currently it's Andy Jassy.
Okay, so who else is on the
Yep.
board? Do you know everybody?
No, I mean, I don't know anybody besides that on the board for GameStop. I mean, I can tell you the CEOs of a few different companies, but
Right, but you don't know GameStop's board of directors.
no, I mean, overall, I'm sure you probably know more of the, super intricate details of their board or something.
Mm, okay.
I'm definitely going to give you that, but I'm sure you know their board of directors, but that's not really, all that relevant, I would say, as to the overall financial direction of the company.
Sure. So how long you been investing?
How long have I been investing?
Yeah, how long you been an
A couple of
investor?
years.
Couple years?
Yeah.
Oh, cool. So whenever you invest, right, you're entrusting the leadership team with your money. It has nothing to do with the business model. It has everything to do with the people that are managing your money. You have to trust them because if they're snakes
Right.
and or if they're crooks, like let's just say they're Bernie Madoff, you're gonna be like, why the hell am I investing money with this guy? He's my general partner, and he's gonna end up robbing me in the end. So we're literally limited partners with GameStop putting money in on a publicly traded company. You invest in the publicly traded companies, the individuals that manage your money and the company's money matters. So for you to say it doesn't matter, I'm just curious. Like, you must not have this track record where you're doing the homework. But hey,
Well,
I'll leave. Hey guys,
well, when you
listen.
say,
To
well,
each
when
his
you
own.
say when it doesn't matter, I'm just speaking more so as to knowing their names. Because currently, I mean, Ryan Cohen, I mean, he started Chewy. They sold it to PetSmart. He was never able to get it profitable recently. Chewy's current management, I believe, I want to say 2 quarters ago, they got Chewy profitable. Um,
I'm
a
just
lot of
curious
Ryan Cohen's
before
other,
you keep spitting out all the nonsense, right? The same playbook and the
yeah,
same what everybody says. These are all the same stories for the last 4 years. At what
okay.
point would you acknowledge the fact that they weren't developing and or building Chewy for profit? They were building it to sell it. Right, the infrastructure was being built. It wasn't yet to be profitable. The model's not there yet. We're giving you an unfinished product. You're going to pay for it. You pay a premium. You pay 3.2 billion, but not necessarily you're paying what the full potential of this company is. I can sell you an unmade
Sure, I
car.
mean,
You got to build it and you got to
sure, I
drive it.
mean, I'll definitely give you that. I mean,
So
I'm
what I'm
sorry.
asking is, why do people keep judging Ryan Cohen based off of Chewy's profit when they were never built for profit? They were literally building for expansion. The difference between companies that you invest in, like you keep naming Amazon, a hyper
Mhm.
growth stock, and their multipliers are crazy because it's a Mag 7 stock, right? They carry the whole index, and you're going to compare a company like GameStop and say, why would you buy GameStop versus Amazon? Well, I'll tell you why. You're at the peak of Amazon. You're at the top of the market. You're 25 years into Amazon, and at this is running at this rate. But beyond that, Amazon's considered a growth stock. GameStop's considered a value stock. Totally different. There's so many different values here and so many different metrics that you measure value. So there's no way that I would buy in on Amazon when I can go over and look at GameStop and say, okay, what's your current ratio? My ratio is much higher at GameStop than it is at Amazon. My book value percentage of shares that I'm buying for GameStop has more net worth than Amazon. I'm not getting equity at Amazon. I'm getting hopes and wishes and dreams, and hopefully the leadership team takes me there. But a lot of factors come into it. You want to talk about interest rates dropping down? You want to talk about like overall recession setting in? That would have more destruction onto Amazon than it would onto GameStop. That's the truth. And whoever just walked in, this is not a joint conversation, Ricky. I got to mute you because we're having a convo. Okay, there. Don't worry about Ricky. I'm not going to let you ride off into the sunset without answering all your questions because you literally said the playbook of what every meltdowner says about GameStop, and it's time for you guys to lose every argument because here's how you lose.
Okay.
What's the better
Can I ask
value?
you a question then, real quick?
Sure.
So, what would you use, I guess, to come to the conclusion that GameStop is a value company?
Well, let's see. They're not a growth company, right? They're downsizing.
Mhm.
Therefore, there's no growth. They're trying to transition and pivot. The best things about transition and pivot stocks and companies are if
Mhm.
you invest in them while they're pivoting and transitioning, that you're going to make money, right? You're going to be great. It's a great investment. But
Mhm.
the before Wall Street, you and your buddies, before you guys actually see where the stock is going to go, you guys won't bet on it. You don't have it in you to evaluate a company the right way. How could you not see the fact that GameStop has $5 billion in the bank and no debt, and yet they make a profit? You're going to tell me that the interest rates for marketable securities is going to affect the bottom line that much? They could be affected for the next 40 years and they still wouldn't go bankrupt. For you to use that title, they're going bankrupt. How? In the history of every single company in the world, no one has ever gone bankrupt with zero debt. Do it for me one more time. Name me a company that has gone bankrupt that has zero debt.
Well, I mean, that's a little bit on the spot, but I mean, here's I can't name you anything off the top of my head, but I mean,
It's
here's
not naming
here's
a
really
company.
the
It's a
the
rhetorical
one.
question. It's logic,
Well, I mean,
logic and math.
here's the real long and short of it. So GameStop currently, as I've said, I mean, really anybody who's done any of the calculations can tell you that it's a vastly overvalued company. And their main business is essentially being they're a secondhand retailer to physical video games. So I mean, would you or would you not agree that physical video games are going by the wayside?
Would you not agree that physical
Because
video games make up 30% of their revenue?
Sure, they would, but wouldn't you say
It's
that
not
that
even the
was a
number
bad
one
thing?
product they
I
sell.
mean, their revenue's been falling. Their revenue is falling quarter over quarter. They're closing stores. Really, the only type of growth thing that they really have, at least that I've seen,
Okay, this is
is
great.
basically their massive share dilutions in order to be able to get cash to keep
Okay.
themselves afloat, as well as to their collectible, which has mostly been flat.
Look, if you're just going to keep talking, because you just keep running, it's like a run on sentence, you make a point, then you let me address it. That's the way conversations work. So the first point that you're making is top line revenue is shrinking. Yeah, it's shrinking because they're becoming more nimble. They're cutting off the fat. In 2006, they had 4,400 stores and brought in $3 billion. They currently have 4,100 stores and they're bringing $4.5 billion. So I would tell you they're up 50% on top line revenue over the last 18 years. But no one's going to tell you this because they want to tell you your number. Your number is that they're shrinking revenue when the truth is they were overstored. They were overextended. That's what private equity does. When they get into your companies, they overstore you. They go and buy stuff you don't need. They expand, and they don't care because they're going to bankrupt you at the end. But guess what? It didn't work here. They didn't get to bankrupt GameStop, and they're never going bankrupt. Not by any
Well,
metric. Where in the hell are they going bankrupt when they lost $500 million in 2022 and now they have a profit annually? How about they have a profit
well,
trailing 12? They're literally improving on every metric. I don't understand what you're saying right now.
well. So again, it's not necessarily meant to be taken literally, but I mean, so they are,
No, when you
you
make
know,
statements, they're literal. Yes.
okay, that's fine. So they're, I mean, their highest revenue that they've ever had, at least from what I've been able to see here, is 2016. It's basically been in decline again. I
Again,
mean, their physical
again, how
games are
many
going down, and
stores?
you're saying that
You
it's a
know,
value company and they're closing down stores, they're shrinking. I mean, I don't know. I guess if you just want to agree to disagree, but to me, I'm really just absolutely baffled as to how you would choose GameStop over a company like Amazon or even just a basic S&P 500 fund.
okay, well, go ahead and look at GameStop annually this year. They're already trading at 80% increase this
Yeah,
year.
that's because of Keith Gill.
You
We
can
both
say,
know that.
is it because of Keith Gill?
Sure.
Okay, so the
What
stock went from
fundamental
10 to
bearing do they
20.
have to where it would pop as much as it does? We both know that it's entirely due to Keith Gill. Yeah.
Okay, so let's think about this for a second because you need to eliminate your idea that it's Keith Gill. Okay, now let's just look at the merit of the company. The company went from having $1 billion and a book value of $4 a share to $5 billion and a book value of $11 a share. So, do you understand why the stock is up?
Why it's up? Well, I mean, I would say that it's incredibly overvalued still. I mean,
For a company to be 2 times book is overvalued?
not in that sense, but I mean, it's
No, 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 no,
they.
no, not in that sense. No, 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 that doesn't make any sense to me. You know, when you buy shareholder equity, you know this thing, right? You take assets minus liabilities. It says shareholder equity, literally shareholder equity. Like by definition, how much of that company is yours? Tell me what company trades at 50% book, two x book.
Okay, yeah, so their price to book currently is 2.2.
What are you doing?
Okay.
What are you doing? You're
Well, I'm
not
just Googling
listening.
it. Yeah,
I don't need you to question my numbers. I am GameStop. I know every damn number at the top of my head. I study
that's
this
fine.
every day. You don't. This is why you're
That's
wrong.
fine.
You come in with the narrative like you know.
This is
Let's
why you're
talk
going
about
to
it.
continue to lose thousands of dollars
How am
because
I
you're buying
losing
a terrible
thousands of
company.
dollars? No
You're
one's
down
losing thousands.
$3,000 currently.
$2,000, and my net
Oh, so
worth
you're
is
down
over
2,000.
7 figures, and you're gonna tell me I'm down $2,000? You're a joke. You're a joke. You don't know
That's not
me.
an argument.
You're
That's
not.
not
You
an
don't know
argument.
me. $2,000. I shit $2,000 when I want to. But beyond that, think about this for a second. Okay. Beyond that, let's talk about it in a different way. Let's talk about GameStop and the growth and the avenues that they can make money. Their partnership with PSA graded cards is a service that beats out PSA Direct. It generates what we call the CAC, the customer acquisition. It costs nothing to bring a customer to their store now. They have an attraction to you, and it's graded cards, it's Pokemon cards, it's baseball cards, football cards, basketball cards, combat sports, soccer, everything you want to name. But beyond just that, they also have a thing called the Raptor 8, where the technology is laced with GameStop co-branded, where you get to hook up your phone like the PlayStation backbone. It's the same thing that's getting released. How about the CandyCon connection that they're doing? There's so many other products they're doing and revenue streams where they're making minute changes, and their gross profit margin has increased from 16% in 2022 all the way to 31% this quarter. That is outstanding. That's better than 2016. So when you tell me a number, don't tell me. It's like this is what I don't understand about you guys. It's like you guys were never an athlete, or you guys never try to get in shape. You know, you run to lose weight. And as you lose weight, you get faster, you get stronger. Then you find that sweet spot. I can be this much pounds, I can run this fast, and I can be this strong. When you find that sweet spot, that's where you do all your energy. That's where you do all the love making you want to do in your years. You're going to look the best in the mirror. You take the picture. What do you think GameStop's doing? They're getting in shape, babe. They're turning the ship around. They're doing the right thing when no one's watching. And because Ryan Cohen doesn't talk to the public, and because stock analysts won't cover this stock, what's your narrative? You have yours. And yours is wrong. You're incorrect. You know what's the best part about you being wrong? If you were right, Meltdown, if you were right, Phil, you would have been right 4 years ago. You would have been right 3 years ago. You would have been right 2 years ago. You would have been right last year. You would have been right last night. But you're completely wrong. And you're never going to
Okay.
win this fight. Never. Where's your position? What do you own? And why are you talking?
Are you fighting against Ken Griffin?
No. Who the hell cares
Oh,
about
okay.
Ken Griffin? I'm fighting
Yeah,
against a balance
so
sheet. You know, you guys, you see, this is what I'm telling you. You don't know about PRs, huh? You know, when I do a lap and I go, you know what, 55 seconds. You know what I'm going to do? Tomorrow I'm going to go 54. I'm going to try for one more second to my own. You know, last night I bought 2 shares. Tonight I bought 1. Tomorrow I'm going to buy none because the market's closed. But come Monday, I'll buy another. And I'll keep buying, and I'll keep buying, and I'll keep buying. It'll keep growing. and I'm going to own the whole company. And when I tell you I'm going to own the whole company, because I got 12,000 people that watch this show, and you know what they own? GameStop. You know what they do? They buy one share a day too. We're eventually going to have more than 12,000. We're going to have 13. We're going to have 14. We're going to have 15. We're going to have 16. And it's guys like you that fuel this flame for me. This is why I wake up every day. When I have guys like you, jokers like you, come in with bullshit, nothing to back what you're saying. How about this? Say something factual, and then we'll go ahead and look back at it, and we'll pull it all out right now. Say a fact for me about GameStop. Not just how you feel about digital. Tell me a fact, and then we'll talk.
Well, I mean, I think it's pretty much indisputable that their business is shrinking. I mean, sure, you can say that they're pivoting to,
Okay.
PSA grading cards or whatnot.
Business is shrinking.
I mean,
Stop.
overall,
Stop. You said business is shrinking. They make more
yeah,
money per store this year than they did 2 years ago. Top line revenue
that's fine.
down.
Where's the revenue?
No, exactly. Did you not hear? It's more money per store, i.e. per capita, however you want to call it out. They're literally making more dollars per man hour. Why? What kind of business do you run? Do you run a business? I'm trying to help
That's
you. They used to do $6.5 billion worth of top line revenue in 2020. And then you think about the profit that they made. They actually lost $2 million for the year. They are making $4 billion this year, and they've made $2 million. So a swing of 8 in 5 years. Yeah, after all the bullshit they've been put through, after all the dragging through the mud, and you want to say it's roaring kitty. That's who moves this stock. You're a joke. This is laughable.
okay. If you want to say that them
buy it.
shrinking stores is indicative of an incredibly strong company, fundamentally speaking, I mean, all right, I guess we can disagree, but I wouldn't say that a company where the vast majority of their sales are from their physical, stores,
Can I ask you
closing
something?
stores,
Why do
double-digit
all you
decline in
guys?
revenue.
No. I have a question for you. Why do all you guys talk the same? All you guys it's like you have a pitch. Like you're trying to sell me on something. Rather than just talking to me like man to man, like, hey, bro, this is what I got going on. This is what I see. No, you don't talk that way. You speak in your language that you think that people don't. I'm smarter than you. You just don't know that yet. But you're going to figure it out. But here's the best part about it all, okay? When you look at GameStop and you see it from a value perspective, why wouldn't I want to buy this stock right now at the all-time low of $20? They got $5 billion in the bank. What other company could I buy right
Well,
now?
because I don't
That
think that their business fundamentally is worth anywhere near $20 billion. Or what's their market cap?
10 billion. Do your homework
right?
before you
10
walk in here.
billion?
10 billion. You don't think it's worth 10
Yeah.
billion?
So I mean,
they have 5 billion cash.
I don't think it's worth $5 billion though.
They have 5 billion cash.
Sure, they have $5 billion in cash, but where's the other $5 billion coming from? I don't think that they're actually.
I don't think you understand how cash works. Okay, so cash is worth what? I'll give you the think about this. I mean, you seem to be somewhat intelligent, so let's think about it. If I had $5 billion in the bank, how much money is the bank going to loan me? What am I worth to the bank? What am I good for? Is that I only get the money that I have in the bank? Is that it? The value of me is just the
you
cash.
can get more.
That's my point. You can get
Yeah.
more. So what's the value of $5 billion cash? You are ridiculous, man. It's like when you talk, you think everyone's elementary. And no. It is elementary, though, my dear Watson. It really is. GameStop has value beyond belief. It really does. And the fact that you guys have to come in here and try to convince people that it doesn't, don't worry. I'm here all week. I'm here all year. I'm here the rest of your life. I'll outlive you on this investment. And it's going to be great. And you're not on this side of the table. But you will. You'll FOMO into it. You'll chase it down when the metrics measure where you want. You start talking PE ratios. They're still transitioning. They're still pivoting. And when they show you the profit, like they're going to show you $200 to $300 million this quarter 4 coming up. They're going to show you $5 billion in the bank. You're still going to have to say, oh, but they're not good because you're paid to do it.
I'm not paid at all. I wish I were paid by Ken Griffin or any of the other.
No, don't throw out nonsense names.
I just think it's a fundamentally terrible company.
Don't throw out nonsense names. Tell us who you are and what you do for a living.
Who am I and what do I do for a living? Well,
There you go.
Currently I'm just going to college and I like investing in stocks on the side.
So you're really not educated.
Well, that's not really an argument. I mean,
you're going to
if you want to make a
college.
you're not educated argument, you try to use
You're paying for something
argument
that's
from
free.
authority.
You're paying for something that's free.
What do you mean I'm paying for something that's free?
Let me tell you something. If you had all the answers and you were so smart right now, like you're so smug and everything, we would be watching you.
Well, I mean, maybe I should make a show on why GameStop's a
Yeah,
terrible company. I don't
go
know.
for
Maybe
it.
I'd make a bunch of money doing it.
Go for it. No one's gonna watch. Why do you think they
Okay,
watch me? You ever ask yourself that?
because you're in a cult,
I'm in
maybe.
a cult. Where'd you
Yeah,
get that?
maybe you're
Now,
in a
where'd that
cult. I
come
don't know.
from? What's that? Where'd that come from? I'm curious.
Well, I mean, I think that's basically indisputable.
How's that indisputable?
Well, I mean, go on Superstock or GME or really anything, and you get banned for having a disagreeing opinion that GameStop is a fundamentally bad company in comparison to the thousands of other stocks that you could potentially buy, such as, for example, Amazon or,
Well, and so I want to buy Amazon at the all-time high of $200 a share.
well, you're assuming that Amazon will never increase in price ever again. You're assuming that Amazon is at the absolute top of its
Well, you're
game, that they
assuming
will
that Amazon's
never
going to go to
grow
what? To
revenue.
Amazon's going to go to $400 a share? That's
Sure, I mean it
100%
could.
it.
I mean
When?
Amazon just yesterday or 2 days ago released their what
I'm
was it? What are
familiar
you
with their
looking at
earnings.
here?
I'm familiar.
Okay, so yeah, I mean they grew revenue by 11%. How much did GameStop grow revenue by? Oh
They're
wait, they
not a
lost.
growth company. This is
Yeah,
crazy,
and
man.
I'm
It's like
telling
you're
you that
deaf, dumb, and blind.
it's a terribly value company. You're not. It's an incredibly poor value play, is what I'm saying.
Incredibly poor value play. So a
Yeah, of course it
pivot
is.
and transition, right? A pivot and transition investment. I think you should study that and see when
Okay.
you should invest and why you should invest and what's the story. The narrative is the leadership first. Then it becomes, the balance sheet and the income statement. But in this case, GameStop has zero cash burn. They have no debt and they make money. So I'm trying to figure what the hell you're talking about.
So I mean that's great. I mean, if they do eventually, pivot and they do have, great online sales and they do bring in a bunch of people from PSA, I mean that's great. But where they're at right now, I mean, again, I've said it a few times, it's kind of beating a dead horse a little bit. But again, I
Where
mean,
they're at right now is $5
they're
billion in the
closing
bank and
stores.
$300 million.
The
$300
only
million.
reason they have 5 billion in cash is for dilution of shareholders. It's not through actual
Oh,
operation,
hold on.
income.
Stop that, because there's another thing. The only reason they have $5 billion is because of dilution of shareholders. That is not true. Yeah, let me explain
Okay,
it to you.
well they raise shares, whatever. But
Yeah,
yeah,
no, no, no,
so
no, no,
they
no,
didn't
no,
actually, create
no,
it through
no,
actual
no, no.
operational profit.
Nobody does. Let me tell you something. All right, and it's in the words of Elon Musk. It's easier to raise money than make money. And I'll tell you something. Okay. They wouldn't have 5 billion if they ran their company wrong. They would raise money and then have to spend it and pay it in covenants and interest. And it doesn't work that way for them, or under covenant requirements. But it doesn't work that way for them because they actually have the money and they're able to save the money and sit on it. Not like AMC when they're actually diluting their actual investors. It's not the same. And what you're saying right now is that GameStop only has cash because of their investors. No, they have cash because people want to invest. That's one thing. Wall Street came to the table and bought up $3 billion worth of shares. Not me. We're already in it. We've been in it. But beyond that, for them to still have the cash and not burn it tells you it's a great company. It's run the right way. I don't understand why you don't understand that. Let me see Amazon raise some funds right now. Let's put their money on the table. Let's see anyone in the Mag 7 put their stock up for sale and see if they could do it. They can't. You guys don't understand. People are smart. You're not. But there's people out there that are smart that understand that I don't need to buy something at the top tick. And you want me to buy something at the top tick because of their growth. Mega cappers, mega growth companies, all that crap that you're trying to buy right now, you're buying the peak of the market. And when it resets and it adjusts, you're going to remember my name. But there's a reason why I have the show and you don't. I want to appreciate you and the time. I gave you so much time and you said nothing in between. Do you have any parting words you want to say on the way out the door?
Not really. I mean, I guess one final thing is, your whole argument, I guess, essentially hinges on the fact that they're able to turn it around and they're able to go, eventually transition into some semblance of a growth company. So I mean, if you want to think that, I guess that's fine, but they
So
don't.
let's do this for a second, okay?
Mhm.
So three ways you spend money, right? Research and development, mergers and acquisitions, or share buybacks and dividends. So looks like GameStop's going to go the share buyback dividend route. That's the first thing. So when value hits this stock, right? Not growth. When value hits the stock, and you guys all come chasing it, doesn't it make you wonder why everyone's still
Well,
in it and
wouldn't
no
you
one's
want
selling.
them to actually invest in the company first to actually start gaining growth rather than initiating a
No,
dividend?
no, I don't want. I
Oh,
don't want to
okay.
see growth at all. I don't want to see growth at all. I just want them to be what they are because I want them to be a different business. I want them to be my business, not yours. You know what's the craziest part? You want them to do what Wall Street wants them to do. And Ryan's not doing what Wall Street wants him to do. He's doing what he needs to do. There's a big difference here. The reason why you don't know the game plan and why the rest of the stock analysts can't give it a buy rating is because they refuse to cover it. It's a coup. You want to talk about a cult? How about the cult to hate the stock? All of you guys that show up every night, watch the show, and say, you know what, Marantz, it's a terrible investment. Really? You think it's a terrible investment? Most of us are green or really close. I was up 100% just 3 months ago. Didn't sell at all. Almost 200%. Didn't sell at all. You know what I did? I sat back and I said, I'm going to buy more because I know what this company is going to be 10 years from now. But that transition is really happening, and you're not going to be a part of it. And I'm happy about that. Last thing before you leave, I'm going to give you this opportunity like I do to every single Meltdowner. All right? Would you like to turn on your camera, say your name and what you do for a living?
No, I don't give out my information over the
I didn't
internet.
think so. I didn't think so. That's the
That's
difference
what,
between guys
yeah.
like me and guys like you. You're afraid. You're afraid to stand behind the merit of your own words, and that's okay. There's cowards out there every day, and you're one of them. Enjoy it. Have a great
That's not
night.
an argument. Enjoy
If
losing your
it's,
money on GameStop.
I
Not a
don't mind.
value
Well,
company.
enjoy overpaying for a damn education that you can get right here for free. Thank you. All right. Well, didn't convince me. Sorry. And for those of you that came into the chat and I muted you, come back.